Investing Podcast, presented by Tusk Media. For a quick audio and video check-in on the stock market, here's the Stock Market Power Lunch.
Hey everybody, welcome back to the Investing Podcast. Beginning of the week, it's Tuesday. We're a day late because the market was closed yesterday. We're an episode late because we were busy this morning. But I'm Andrew Hall. This is the Investing Podcast for Tuesday, September 6th, 2016. This is the Stock Market Power Lunch. Joining me, the guy that's normally here in the morning, Ben Nye. Ben, what's up?
I'm doing well. I heard that I did pretty well in my college football picks over the weekend. So
we're going to do a quick recap at the end of the day today. You are in the lead, I believe. You and Krebs. So strong first week start.
That Wisconsin pick.
Interns batting 0. They've yet to get a pick right this year, so we'll see if they can break that streak. So we'll do a quick recap at the end of the day today, and then probably have you guys come back out for the panel Thursday, I'm thinking again, and kind of make some picks again. But yeah, fun week for college football already. Fun weekend at the lake. We had Narwhal Lake weekend. Awesome time. Went up Friday afternoon. Some people, Scotty and Garrett didn't get back till like late last night. You came back a little earlier. I came back. Actually went to Chattanooga and then came back. So everybody's recovering. Everybody seems pretty focused. We just had first of many PM meetings, portfolio management meetings for the week. So we're kind of rocking and rolling. We're going to hit on some of those topics. First up, we got a quick rundown on the markets. Up for the most part, just kind of across the board. Dow up 12 basis points, S&P up 15. NASDAQ up about 1/3%. Global Dow up about 0.5%. Gold up 1.5%. Oil, only thing keeping us from a green chasm, but it's barely down. So strong day for the markets. A lot of news here, I feel like, in terms of M&A, things like that. Enbridge and Spectra, and I put up on there differing tickers there, which is not supposed to be on the whiteboard. But we actually have SE and ENB, so let's just wipe this off. So talk to me a little bit about what's going on there. Huge merger.
Yeah, two big energy companies. They also have master limited partnerships, which provide midstream assets, these basically own pipelines that they funnel oil and gas and products through. And so they're merging too. So the Enbridge is the Canadian entity.
And they've got under them EEP. And SE has SEP, which is where that came from.
Right. So what these vehicles, SEP and EEP, what their role is, they pay large dividends, and what SE can do, for instance, is they can do a new project. So let's say they want to build a pipeline. They say, okay, well, we're going to raise money through SEP. So SEP will come to the market and say, okay, investors, we're looking to raise $200 million. We're going to own this pipeline that SE is going to operate. SEP is going to own it, and then SE will basically pay SEP and then pay the investors a dividend. So these guys will spend a lot of money up front for that kind of longer term cash flow, and these guys are the operators. But SE and ENB, these guys are the ones who are merging, which kind of leaves an interesting situation. Because now we have one consolidated entity and two guys who are out there raising money and paying that dividend. Interesting thing is EEP pays over a 10% dividend, and SEP pays just about 5.5%.
Yeah, I think it's right around 6, something like that. Yeah, so it's kind of it's a weird dynamic, and this is all going to become Enbridge. These two are going to combine. Enbridge is going to be 57% of the ownership,
right,
whereas Spectra is going to be 43%. But now Enbridge is, in theory, at least for a little while, now going to have both of these MLP drop-down products. So a little bit unknown as to what's going to happen to the two of those. What's your best guess right now? And I know we talked a little bit about this, but what are you thinking?
My best guess is that Enbridge is doing this in order to reduce its cost of capital. It doesn't want to raise money at 10% anymore.
Right.
It doesn't want to have to pay out that 10% to investors. Think of it, if you're a bank and you're giving out loans, would you rather give out loans when you have to pay 10% interest or when you have to pay 6% interest? You want to pay the 6%. So my view is that these two will converge. So the yield on EEP will go down somewhat, and the yield on SEP will go up somewhat. So as we know, price goes down, yield goes up, yield goes down, price goes up.
Yeah.
So
Yeah, I think
got
a
that
lot of
right.
this, is a lot like bond week. Some of the stuff we
Yeah,
talked about
right.
during bond week. So kind of the idea of, why would somebody call a bond? People would call a bond if it's paying a higher rate of interest than what they could issue at now. So now they can acquire this, focus in on that, basically reduce that effectively, and kind of restructure a little bit. And in addition to that, become kind of a massive operator.
Right.
Kind of on both levels. So it's kind of a complicated merger in some regards. It's not just two companies. It's almost like looking at two companies and two spin-offs that has for specific purposes. All of that kind of coming together
Right.
under one name.
And a lot of unanswered questions
Lots.
too.
But market-wise, all of these components are moving a good bit. SE is up, maybe 10%,
Yeah.
something like that. Meanwhile, SEP is down like 3.5%. So just to kind of show you the difference even between one side of the equation, you got a lot going on there. A lot going on maybe at
Yeah.
Twitter. We're not sure. Sounds like Thursday, at least in theory, according to reports, Twitter's gonna basically revisit the idea of staying independent versus entertaining buyout offers. We've heard tons of rumors, tons of speculation about this, really for a long time. I mean, if you look back at Twitter stock, it's trading at like $60 18 months ago, and then just kind of went on this tear, down to 40, down to 20, down to 13 or so. Really, since 13, it's been kind of talking about buyouts. Probably actually even before that decline. I mean, even for a while, it was, you had this great platform and people just saying, well, it's not quite working. There's got to be a change there somewhere. So Twitter has basically come out, according to reports, and said, hey, we're going to see what's on the table. You combine this with some speculation just last week. A founder of the company coming out, Ed Williams, and saying, hey, they need to explore every option, explore their best options, which would obviously, most investors would probably think would involve a buyout.
Right.
And again, just all these spikes. I mean, you can go back and look and almost find when these rumors have hit, with Twitter stock just kind of spiking and then coming back for the most part, but still trending upward. Kind of a crazy, a little bit of an odd story to just the way it's being shaped and presented in terms of this is the conversation that is happening. Seems like something you wouldn't want to get out there if you were Twitter management, if you didn't have a bird in the hand. But at the same time, Twitter management, a little questionable,
Right.
as you can tell by the stock price. Any thoughts on this, Ben? Any leaning from you? Just in terms of buyout, no buyout, any thoughts?
Yeah, perhaps I'm a little bit cynical on this, but to my mind, I kind of look at what the other party is thinking. So why would Google buy them now when Twitter is basically soliciting offers and saying, we want a bidding war? Why would they buy them now when they could have done it at 13
Right.
a few months ago? Also, we were trying to think at the PM meeting, what large acquisition for a company that's been around for a while has the likes of Google or Apple or even Rupert Murdoch's empire? What have they done that's a kind of like a marquee acquisition like that? And it's difficult to really think of one.
Yeah, it is.
I think you look back at when Google acquired Motorola, but I think that's something they don't want to do again.
Right, maybe a lesson learned there. Yeah, and you kind of think YouTube was a pretty big acquisition for Google back in the day, but YouTube also wasn't a company of Twitter's
Right.
notoriety, for better or
It wasn't
worse.
public
It
either.
wasn't public. A little bit of a different scenario. It's kind of odd. I mean, and from my perspective, in terms of why would you even let this news out there? Who would be interested at this point? The only way that this all starts to make sense in any way, at least at surface level, is if there have been legitimate offers from multiple parties, and for whatever reason, Twitter management has consistently rebuffed those advances. And now they're going to come to the table and say, okay, you, and you. And those could be a number of parties. We've seen everything from Google, and there's a theory that Alphabet's going to spin off a media company and that Twitter would really be kind of the cornerstone of that. We've seen Apple itself potentially being interested. We've heard, things like 21st Century Fox, Rupert Murdoch, some people even say Microsoft, which I don't think makes a lot of sense after LinkedIn. But maybe they sit down there and they say, hey, here's the parties that are interested. You've all made advances, we're now ready to listen. So maybe that happens, but at the same time, that in some ways almost becomes just a larger indictment of management that
Right.
they haven't really taken this seriously as is. So maybe there's an activist investor that's kind of pulling some strings, wanting these meetings to actually start happening.
Well, it's interesting you bring that up. Matt Burton, the founder of our company, he also suggested that as a possibility, and that's something that I think is increasingly likely. I mean, you look at some of the press reports. We had David Faber of of CNBC saying that there's an activist investor who's looking at the company. And then when you draw the parallels to Yahoo, so what happened at Yahoo is that there was increasing pressure being put on management to do something, whether that's a buy or an improvement of strategy, do something. And so coincident to that, where all of a sudden, they're starting to talk about, oh, well, we're going to put ourselves up for sale. The process took, 9 months or maybe even longer. So I'm thinking that could be a interesting parallel to what we're seeing here. So I guess we'll find out on Thursday, or maybe, as you said, maybe we won't find out anything. Maybe we'll just kind of be...
It'll be interesting to see how management spends this, just because it's one of those companies you look back, there's a lot to like about the platform, maybe not a lot to love about the business. But then even some of the more basic things, they report EPS primarily on a non-GAAP basis, but you look at EPS, I mean, they beat estimates every single quarter. I mean, I just went back and reviewed the last 2.5 years of reports this morning after reading this story. It's kind of like every quarter they beat estimates, and yet every quarter they beat estimates and the stock does this.
Yeah.
They beat estimates and the stock does this. And it's kind of one of those just bizarre things where if they can get out of their way and actually let an acquisition happen. I kind of feel like Twitter, as great of a platform it is, it could be unbelievable in Google's hands.
Yeah.
Is it worth Google acquiring? I don't know, but it seems like the ad monetization, the video components, the live streaming, all that kind of stuff would be attractive to someone like Google who also wants to get into the social media space. It could be incredible there. Does that happen? Who knows? Some data. Talk to us about data as it leads up into kind of the Fed announcement that we're expecting this month.
Yeah, it's interesting because people were looking at some of the data that was coming through really through the middle of last week and saying, things are doing pretty well. We could be looking toward a rate hike in end of September here, or middle of September. But then we had the manufacturing PMI, which is an important data point that people like to watch, and that was a lot weaker than expected. And then we had the employment number. Interestingly, August is always, even when you seasonally adjusted, it's always the weakest. Not always, but the average is always that it's the weakest. And then today we had the ISM non-manufacturing index, or people call the ISM services index, and that was weaker than expected as well. And some of the interesting data points coming out of it. So it was 51.4 in August, coming down from 55.5. And the employment number was 50.7, coming down from 51.4. There weren't really any positives to come from it. I mean, you had some real declines in new orders, down to 51.4 from 60.3.
That's a drop.
That's a big drop. And so what happened in August? I mean, everyone was so sanguine, but the data coming out of it was just not nearly as sanguine, and things seem to be decelerating.
Yeah, that's kind of one of those things you start looking at it. It's crazy when you have one overriding story driving so much of the market, which really has been the case with the rate hike. Will it happen? Will it not? And then you start to see how quickly the reporting of this can change and kind of the narrative starts to shift. It's interesting to keep an eye on, and then also watching the market respond, because as you mentioned, the jobs report Friday, market really responded very positively. And you look at today, market's performing pretty well. You wouldn't say, the market's running up on this data by any means. But so that's kind of the two sides of the coin, is both the anticipation as well as the anticipation of the reaction of the market. And it starts to become a really, really fluid situation. So definitely something we're going to continue to keep our eyes on really over the next couple weeks. I guess that's about it. We'll wrap it up there. This was the Investing Podcast, Stock Market Power Lunch. I'll be back at the end of the day with Matt Krebsbach. We'll update you guys on college football, all that good stuff. Y'all have a great one. Talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.